This is an update and technical analysis on Bitcoin cryptocurrency here off the daily interval, and I'd mentioned it as a breakdown sell signal off this key primary trading range. Came down. We actually consolidated for quite some time, for weeks on end. Came right back up to the bottom of the trading range, which offered another objective short trade entry, and that was good for a double-digit 10.7% crash. But I did mention if it broke right back into this key trading range, at the bottom of the trading range, that I would completely start scaling out and stopped out. And I was stopped out for that was bad for a minus 4.52% stop loss. And there has been nothing but a fueled short squeeze on a break above that key 18,332 price support that I have been hyping on for quite some time now off the weekly 236 fibs retracement. Came out to test that 236 weekly fibs Bitcoin spot price resistance and squeezed to the higher, squeezed even more. This is all a complete massive fueled, a momentum fueled short squeeze setup. Right, but we had a slight reaction on that 21,453 price support and completely starting to snap up. And here we are breaking out amongst this key primary downtrend line off the November reactionary highs of 2021. And we are starting to break out slightly right back above it. Any back test, maybe a rejection right back up. This would offer an objective short trade entry off that 24,623. The risk reward ratio is skewed to the downside as far as this is where I'll begin to start scaling if we tap that, and that would result in risk reward ratio right back to the bottom, at least the bottom of that primary downtrend line, for a close to a double-digit percent crash there, which would be double digit versus a breakout above. Start to squeeze out around a -2, -3%. You want to give yourself a little bit more room and flexibility with the beta, the massive amount of beta, and how quickly crypto moves in each direction. But that's an objective short trade entry, and here we are off the weekly. This is Bitcoin to USD ratio. I love using this proxy as a gauge for where the next underlying trend will go in the cryptocurrency markets, and we are at a massive key pivotal inflection point right here off this key primary uptrend line off the 2015 reactionary lows crash. Cuts right through the COVID crash, cuts right through the June 2022 crash, and here we are. We're starting to come out, honing up above it, which will be the top of the trading range around that 24. Now we'll start to scale in right there. That is, call it a trio line of resistance, coinciding with the top of the range, coinciding with the 200 weekly moving average. So that is a triple line of resistance, offering an objective short trade entry on a breakdown right back below that 236 fibs 18,332 price resistance, which would be the risk reward ratio, and that would be met with a pretty good sizable selling for a 26% crash for any long-term swing traders. And again, I cannot stress enough that key 18,332 price support would be met with a wave of a big selling, in my opinion, because it would burn off that divergent low as well and get a lot of longs trapped in there and gunning for the next leg down, in my opinion, that I've been trying to call for quite some time. But anything's possible. What bulls want to see, bull long traders, they want to see a break right back above this key uptrend line here, which would be extremely bullish in my opinion. And anything's possible. Maybe continue this uptrend to the upside on some newer heights, and it would really start to gain some health in some of these key momentum indicators, in my opinion. So we'll see how that turns out. We'll zoom in here to the 120 interval. We do have potential negative and or bearish divergences here off the 2-hour interval. That key range around that 24,000, 24,757. Yeah, you could. I mean, this would be an objective short trade entry, an aggressive, very aggressive short trade entry from here. But I'm going to wait for the top of that trading range off the daily interval to start scaling in, which would be 24,623. Right there, that's where you want to begin to scale in short, in my opinion. We're not too far away from that. You could even aggressively begin to scale in a little bit here, a little bit there, and a little bit on that 24,191 price resistance, or especially the top of that range at 24,623. Anything a break above that 24,875, and it'll be time to scale out of your short trade position. The risk reward ratio is definitely skewed to the downside with a potential negative end or bearish divergences here off the 120 interval. And if we do get that break and we start to stop here, that would be good for 22 for a 2.3% drop, at least back to the bottom of this 22,440 for a 5.75% crash. And any long traders want to see you revisit right back up to this key primary minor uptrend line here. And you want to see long traders, dip buyers start to step in here around that key range 22,400 and continue a potential primary channel here that could ensue here, which would look something like this. And a breakout right back above that 24,623. I would only suspect another potential short squeeze setup